Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. So as we have promised yesterday, we have prepared today the weekly report where we have discovered the second big bulk of the information relates to inflation. And there we see some unpleasant surprises across the commodity market, which might bring some really big problems for the plans of the United States Treasury and the Fed Reserve somewhere in the second half of 2024. So based on the conclusions that we have made, we think that they actually have to pray that spike in inflation will not happen until elections. So we suggest that it is unavoidable rally on the gold market close to the end of 2024, or at least in the worst scenario for the gold market, in the beginning of 2025, because this is definitely we will get poor gross domestic product numbers at the end of the year, spike on the inflation, drop of the real interest rates, and very probably this will be drop on the stock market. All this stuff making the great background for a rally in the gold market. So if even due to some manipulations with the statistics and using the cash reserves that now the Fed and the Treasury have, first of all, this is TGA account of the Treasury in the Fed Reserve, which is 800 billions. Rest of the repo markets approximately 600 billions. If they will actively use it, and they will, that could provide some liquidity and create to the stock market, keeping it on the surface, letting them to even move higher. This could make the vision of the prosperity. So, but that will be temporal, and all this stuff could provide make some holding effect on the gold, which could mean that gold could stand in sideways action due to these efforts of the Fed and the United States Treasury in 2024. So we will get in a wide sideways action. And the worst scenario, we could get even deeper retracement. I'm not excluding that might be drop somewhere to the 1850. All the stuff we're talking from the long-term perspective, not just for a coming week. I'm just sharing with you our long-term view, but at the same time, we suggest that this period of time will be great for accumulation of the gold position, with a possible rally on the next year or closer to the end of 2024. That's our basic scenario. How it will turn, we will see. But currently, we see, really bright signs that all this stuff should happen. So yesterday we talked about the budget deficit, why this also drop in the gross domestic product unavoidable late in this year. So rising on the yields probably is also going to happen this year. Today we're talking about inflation. So all this together creates the more or less complete picture for the 2024 financial year, and see what will happen. Speaking about the short-term perspective, markets now is turning to some very narrow consolidation. Better and better, you could see a triangle shape. Since the volatility dropped significantly and range is becoming narrower, it means that the breakout, whatever direction it will be, probably will be fast. So basically, this range should set the direction. So because this is high wave pattern on the monthly chart, and direction will be set once market will break it in one or another direction. Until this moment, we probably should stay focused on the intraday charts performance, as we did in last week. So on the daily chart, take a look that we finally have got the bullish grabber here. It looks a bit different compared to what we see on the COMEX gold futures, but still we get the grabber. On the futures, you could see that we've got it not on Thursday, but on Friday. So anyway, we've got the grabber. Nominally, based on the futures chart, trend direction remains bullish by far. So here we have the closing below the MACD, but in reality, on the comics, you see that it's still bullish. The market has created the grabber. That actually what we talked about in a bullish setup for the whole previous week. So we said if you get the grabber, market will be able to stay above 2020 area. Here is a bit price difference to the spot market just because of the difference in the interest rates. Don't pay attention to that, just take a look at the picture. So that could provide some chances for the bulls to take the position. This of course for those of you who are ready to take significant risk of this trading. Why it's accompanied with a great risk, I will show you on lower time frames. For the bears, we do not have yet the clear context by two reasons. First of all, we have directional pattern on the daily, as I have explained this grabber. Second, on the 4-hour time frame chart with this head and shoulders pattern. Well, yes, this pattern looks poor, but it has not failed yet theoretically. So theoretically, this pattern is not failed, it's still valid. Since we do not have clear bearish background, we can't consider taking a short position right now. The one thing that probably you could think about is a possible using of the stop sell order somewhere around the A lows, suggesting that if markets will aiming on the breakout, you will take the stop position in the moment of the breakout, and then market will accelerate down. This is one of the solutions that bears could take if you would like to. But for immediate taking of the short position right from these levels, despite that we have all this stuff, it's not really pleasant for the bulls. This will be some kind of the mistake. So because when you're taking position without the context, yes, you might be right if later market will form bearish context, but at this point, this is not quite correct. Speaking about the bullish position, here's everything stands very simple. You have the grabber, you have the invalidation point right at these lows. So nominal background for the taking position exists, but this nominal background accompanied with a big risk of the loss, just because, as you can see, overall context, the bullish context look very weak and not very inspiring and attractive for trading. That's why in the current solution of the possible taking long position, I see some sign of the gambling. So it will be some pain or gain situation. If you will win and the market will start really upward direction based on the grabber, that will be just outstanding result. Because your potential stop loss order might be placed very close, your loss will be very small in the case of the downward continuation. That's the only attractive thing in a bullish position right now. So from that standpoint, just decide whether you're ready for that or not. On the hourly chart, I do not see something really interesting. You could see that the market just has returned a bit down to the XOP. This is actually lows of the bullish grabber that we have. And if market break below them, you even maybe do not need to place stop below this area. This is only if you would like to possess simultaneously with the grabber with this head and shoulders pattern. So in this case, you could place below the A. But if market will break these lows, the grabber on the daily chart will be erased, and the daily trend officially will turn bearish. From that standpoint of view, it will be already big hit on the bullish sentiment, and almost it will be predefined downward continuation. So for the bullish position, placement is great because it guarantees very low risk, but background is bad. Correspondingly, results might be, well, not very good. And here's the decision that you have to make. Either do nothing and just see what will happen, or just make the bet and see also what will happen. So that's in 2 words what we have on the gold. Let's keep watching. Next week, guys, as you know, very important data will be the CPI report, because last month CPI has shown some upside tick, not only on the December numbers on United States, but also in European Union. With all the stuff that we have discussed today on inflation in the report, this will be really intriguing data released later in this week.